Good morning, Melon Heads. Today is Tuesday, March 28th, 2023, and the opening bell go ding. Stocks down just a little bit at the bell this morning. Top stories today, we have got the government crackdown on crypto continues. The latest chapter is yesterday. About around lunchtime, the CFTC issued a complaint against crypto exchange Binance and their founder, Changpeng Zhou, alleging that the exchange had knowingly violated U.S. KYC laws and something that a lot of us have suspected for a while, that Changpeng Zhou was trading or front-running his own customers' accounts using his platform. No big surprises there. I have long been a big critic of Mr. CZ. I don't think he's any better than Sam Bankman-Fried. I think he's been trying to do exactly the same thing Sam Bankman-Fried has been doing for years. Elsewhere in the markets, we had Elon Musk yesterday sounding the alarm on commercial real estate, something I've been talking about a lot on this channel. And really, the more we go through this banking crisis and the more details that emerge from it, it really looks like the entirety of this whole scheme at the FDIC, with the help of the Treasury and the Fed, is all about containing the commercial real estate collapse. That is the main driver going on. They need to do everything in their power to make sure commercial real estate does not hit the market and get marked to market, and we actually learn what this stuff is worth. Because then every bank across the country has to go and adjust the values on their books to what that commercial real estate is that they're holding. And that's when the whole thing comes down. But first, we're going to shrink my big melon of a head, and we are going to take a look at what's going on in markets this morning. We've got the S&P is down 9 points or 0.25% at 39.67. We've got the Dow is actually just barely in positive territory. No, it's not. There's a big red candle down 41 points. Or 0.13% at 32,390. And the NASDAQ leading the way lower, down 1/3% or 37.5 points at 11,732. So stocks losing a little bit today. The U.S. dollar is down 31 basis points at 102.55. Keep an eye on that de-dollarization talk, folks. I'm starting to see a lot of talk of the world de-dollarizing on Fox News, on CNN. I saw the story yesterday about the president of Kenya telling people to dump their dollars. China is making inroads in the Middle East and in Africa, and it really looks like the pace of the talk of global de-dollarization is gaining steam in these last couple of days. Something to keep an eye on. I've talked about that months ago. I haven't really been following the story all that closely in recent days, but when you see it hitting mainstream news, you got to start to notice at that point. Looking on at the bond market, it looks like yields are mostly higher today with a couple of exceptions. We got the 10-year yield is at 3.56, up 3 basis points this morning, or about 1%. The big mover appears to be the 2-year is up 6.5 basis points, or 1.6 at 4.02%. Looking over in commodities, we have got gold is up about $10 this morning at 1,981, up 0.5%. Silver is about flat, up 2 cents or 0.1% at 23.16. Crude oil is looking pretty good. It caught a bid yesterday. Currently, WTI is trading at 72.62, down about 20 cents or 1/4%. And natural gas, of course, still cannot catch a bid. Currently at $2.18, down about 3 cents this morning, 1.4%. All right, let's get into these bigger stories going on this morning. Here's the one from yesterday. Binance and founder Changpeng Zhou violated compliance rules to attract U.S. users, according to the CFTC. Now, the first thing that jumped out at me when I saw this was, this is the CFTC is pushing this case. Well, I thought the SEC came out and said everything but Bitcoin is a security, Bitcoin is a commodity. So there's some inconsistencies going on here with the government regulation. The fact that the CFTC is leading the charge here, I found that a little bit curious. More to come on that discussion, I think. But the CFTC alleged that Binance violated federal law to solicit U.S. users for millions in revenue, a potentially existential threat to the exchange. Binance and its CEO, Changpeng Zhou, and its former compliance officer, Samuel Lim, are all named in the complaint. And here's one of the big screenshots from the complaint that you want to take notice of, and that is Binance's proprietary trading activity. During the relevant period, Binance has traded on its own platform through approximately 300 house accounts that are all directly or indirectly owned by Changpeng Zhou. In other words, this complaint is basically maybe not validating, but it's making the same accusation that a lot of very well-known crypto watchdog accounts on Twitter, namely a guy named Bitfinex, is one of the accounts I've been following for a long time. They have been alleging this for years, that Binance is just one great big wash trading shop, that Changpeng Zhou is front running his clients, siphoning off millions, maybe even billions of dollars. And here this complaint is alleging that he's using 300 different accounts, all controlled by him, either directly or indirectly, to accomplish just that. And of course, on that news yesterday, Bitcoin sold off hard. It dropped, looked like about $1,200 at one point, recovered some of that, currently sitting down about $700, just above 27,000. The other main story coming out yesterday is Elon Musk says the state of commercial real estate in the debt market is by far the most serious looming issue. And this was on a Twitter post just yesterday. And look, folks, the Silicon Valley bailout, the Signature Bank bailout, everything going on over at Blackstone and the halting of withdrawals, it all looks like it is meant to contain the problem of commercial real estate. Of all the economy's looming threats, Elon Musk says the state of commercial real estate debt market is by far the most serious. On Sunday, the Kobayashi letter, I highly recommend that Twitter feed, by the way. The Kobayashi letter is excellent on FinTwit. A newsletter focused on global capital markets tweeted that over the next 5 years, more than $2.5 trillion of commercial real estate debt will mature, claiming that that's far more than in any other 5-year period and in history. All the while, rates have more than doubled, and the letter claims only 60 or 70% of commercial real estate is occupied. Good God, that number is terrifying, folks. Only 60 to 70% of commercial real estate is occupied. I want you to imagine if 6 out of 10 or 7 out of 10 houses on your street were vacant. What do you think your house would be worth? Do you think it would be worth what you owe on it? Probably not. And that's what they're saying is the case in commercial real estate right now. And anybody who's been to an office in the last year or two could probably attest to that. You go in for your mandatory 1 or your 2 days that the boss makes you come in, and the place is a ghost town. There's nobody there. Refinancing these loans is going to be incredibly expensive and likely lead to the next major crisis, the letter wrote on Twitter. The worst part, 70% of commercial real estate loans are owned by small banks. And I've seen that number referred to as high as 80%. Rapidly rising rates are teaching everyone a valuable lesson. There's no such thing as free money. Now, folks, think about a couple of things that have happened recently. All right. Well, let's just look at this story right here. This is a case in point. Here's why the U.S. had to sweeten the terms in the SVB sale to get it done. First Citizens Bank, acquiring Silicon Valley Bank for $72 billion, or $72 billion of their assets, right? But check out some of the sweeteners that they added here. They're acquiring $72 billion in assets at a $16.5 billion discount. That's a 23% gain right there. It's doubling the size of First Citizens' assets. Let's see, what else we have here? They're gaining 17 branches. The FDIC remains on the hook for $90 billion in SVB's assets being kept in receivership. So all the toxic, my guess, all the CMBS, all the mortgage-backed securities, all the toxic assets that nobody wants to be caught dead holding the bag on, the FDIC is going to hang on to those, just like they are in the Signature Bank case. Right? I did a video a couple of days ago talking about this when New York Community Bank bought out Signature Bank. They did not touch one penny of Signature Bank's commercial real estate portfolio. What's happening? The FDIC is stepping in early. They're seizing these banks before they fail, mind you. None of these banks have actually failed. They've just been seized by the FDIC. The FDIC is selling what they can, and they're keeping the toxic sludge, the commercial real estate. They're hanging on to that. That is being left on the books of the government. The taxpayers are on the hook for those losses. Anything that can be sold is being sold. Now consider that in the context of what's going on over at Blackstone. Blackstone halted withdrawals from their commercial real estate. Their BREIT, the Blackstone Real Estate Investment Trust. Why did they do that? Because as people were withdrawing their money, they would have been forced to sell those commercial properties, and they knew they weren't going to get as much money for them as they held them on their books for, and so they just locked people out of their money. So between what the FDIC is doing with these banks, between the Fed opening the floodgates, tens of billions, hundreds of billions in lending, and then you've got Blackstone halting withdrawals. It's all about keeping any commercial real estate from hitting the open market. And that's the takeaway you got to have from this. If this commercial real estate is allowed to hit the open market, then we'll finally find out what it's actually worth. And when that happens, commercial real estate all over the country starts to get marked to market, and the value being held on those books at all of these banks starts to go down instantly. All of these little banks are insolvent. And that is what the FDIC is trying to contain. That is what Elon Musk is warning about. That is what Blackstone is so afraid of. So keep your eye on that commercial real estate problem, folks. And all that debt is maturing over the next few years. And as that debt matures, the loans have to be paid back. They either have to be refinanced or paid back. Well, you can't refinance when interest rates have doubled. It becomes too expensive. And you can't sell the building, so you can't pay back the loan. That means defaults. A wave of defaults are coming. And before you say, well, I can't wait for that to happen because I don't own any commercial real estate, are you sure about that? Have you looked into what your pension actually holds? Have you looked into what the mutual funds in your 401k actually holds? I wouldn't be so sure that you don't own any of that. And I just want to say thank you very much to my friend Zarkos. I appreciate the super chat and the support of the channel, sir. He says, considering your country is at war with Russia, I was not informed we were at war. To my knowledge, no declaration has been made, but I get your point. We're acting like we are, using Ukraine as a proxy, as I am a complotist. I'm not sure what a complotist is, thinking the stock market will be kept high, whatever it costs. Well, they certainly are keeping asset prices artificially high right now by opening the floodgates of liquidity, by pumping all of this cash into the system or loaning it into the system. However you want to describe this, not QE. What is the net effect? They are supporting asset prices by opening the floodgates of liquidity to the banks to ensure that the banks don't have to sell their commercial real estate and therefore they don't have to mark down their commercial real estate to what it's actually worth. They are further inflating the asset bubble. And you're right, that will put upward pressure on stocks. Absolutely right, Zarkos. Thank you very much, sir, for the support of the channel. I appreciate that very much. Thank you very much, by the way, to all of my Patreon supporters. You guys are amazing. I appreciate very much what you do for the channel. I'll be scheduling our weekly Zoom call for Wednesday. I'll be scheduling that today, so keep an eye on the Patreon feed for that. There is a link down below should you feel so inclined. By the way, hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.